Check this out on Zillow, guys. In San Francisco, if you sort the homes from prices high to low, most of the homes only really sell for $9 to $10 million. Whereas if you set this location in Toronto, Manhattan, or even Seattle, as bad as they are, a lot of homes are worth way more than this. Well, one of the reasons why is many of these property prices have been cut in half. In fact, penthouses like these in downtown San Francisco, nobody wants these penthouses anymore. I mean, 4,300 square feet for $8 million. They can't even sell this for $8. They probably could only sell this for $4 or $5 million bucks. And in the downtown region, selling for this cheap is a little bit unheard of, because if you go to other major cities, like if you go to Midtown, Fifth Ave, in Manhattan, 4,300 square feet in that good location, it's going to cost you like 20, 30 mil. So if you check out what's happening in San Francisco, real estate is down in the dumps. Nobody wants to buy San Francisco real estate anymore. In fact, if you look into the amount of multifamily properties defaulting, it's kind of scary. San Francisco hit by another huge blow as residential property now is beginning to tank. At first, it was most likely the commercial sector that was taking a huge hit. Like, we're talking about 70% off or else nobody will buy it. Black Friday deal type levels. But now residential property is being affected, with investor landlord ditching 459 homes across 12 buildings due to plunging occupancy rates, blaming it on crime. I don't blame these landlords. They spend millions of dollars in buying these properties, renovating these properties, and they want to make money in the city. But the city literally ran themselves to the ground. I mean, a lot of these businesses, landlords are mad because they invested so much money before the pandemic and during the pandemic because they thought that San Francisco was a tech city. But they literally ran themselves to the ground. Imagine never solving the homeless issue, never solving the drug issue, and just let San Francisco fester. That's what many business owners are saying. If you look at this landlord company, they defaulted on a 2018 loan for $88 million. That was underwritten for 459 rental properties and 12 buildings. The creditors are now selling off the multifamily properties as vacancies fall to 82%. Now, San Francisco is pretty much experiencing a post-pandemic doom loop. Occupancy rates are not great. We're seeing intensive vacancy rates, especially in the commercial sector. But I'm kind of surprised that even the residential sector is facing this. And if you look into some of these higher end luxury homes, like this condo right here, nobody's going to buy it. Not only is this condo literally tilting, but there's not really that many buyers for a whopping $7 million condo. Now, something a little bit nicer like this one for $7.7 million. Yeah, there's not a single buyer on the market. Nobody's looking at these homes. It's actually pretty sad. And if you look at some of the cheaper homes and more realistic prices, they're also getting some of the biggest price cuts. I mean, look at this one. You literally have a pool for $2.4 million smack in the middle of San Francisco. You could kind of tell how much prices have truly deteriorated for the city. And if you look at this, I haven't seen a 3-bed, 2-bath condo for just $1.1 million. I know it may sound expensive, but for a city like San Francisco, units like these typically sell for at least $2.2 million during the peak. So 1.1 is pretty shocking, with a lot of these properties knocking off 30, 40, 50% before being sold. Not to mention, if you want to buy these properties to rent out, good luck. It's not happening, especially with their rental laws being completely messed up. You might even have squatters there for years. Business owner says San Francisco is getting worse for restaurants because of the homeless crisis. And they're saying that business is already very bad right now because of the street conditions. Guys, San Francisco thrives on office workers. But when you see so many office workers leaving San Francisco because of the high crime, well, San Francisco basically screwed themselves. San Francisco is actually a pretty good location. It's surrounded by water on all three sides, but this is what it looks like now. This is what San Francisco looks like. And it's no longer just concentrated in the Tenderloin district like before. Now these scenes are spreading out to like Nob Hill. They're spread out to the more downtown areas. And they're spread into the Civic Center, which is where Reddit and X is headquartered, along with Uber. This is literally what San Francisco looks like. If you show this video to somebody outside the US, they probably think it's some sort of third world country until you tell them it's San Francisco. They're like, hold on a second. Isn't San Francisco part of Silicon Valley? Is this where all the tech is? But no, this is what San Francisco looks like. City doesn't care. And people also wonder, like, the city taxes people a lot. Like if you make a mill, they take half. How did the city become like this when they spend that much money on combating the homeless crisis? People also argue that San Francisco isn't really spending money the right way. You have other countries literally solving their homeless and drug issue with just fraction of the amount of money. So I have no clue what in the world San Francisco is doing. Not to mention, imagine opening a business in this location. Kiss your business goodbye. It's not having any sort of business. So this is kind of sad. The city really isn't helping. People also wonder, like I said, what are they doing with the money? So thanks for watching, guys. Comment below. Hopefully San Francisco recovers. It is a pretty wonderful city. If one day these scenes are no longer there, and hopefully they do recover, because San Francisco real estate and also their tech companies and businesses are all leaving.